Hi, welcome to the Market Alert for Thursday, the 21st of January 2016. Just before we get into the rest of the market, let's just talk about the lack of trading signals in the primary trade time and also in the evening. We just had one in the quieter time there, which was a loser, but in the pre-market session, again, you can see we had trades there all the way through, and it's the same on the overnight market once again, as the markets moved higher to begin with, and then you can see there the market dropping some 300 points on the overnight. So the volatility is increased to a degree that it's highly unlikely we're going to get any potential signals during the quieter time as well at the moment, and I think this is only going to exacerbate, which I'll come to in just a moment. So there is another alternative to this, and that's to increase the bar range from 25 to, let's say, 35 or 40. We'll try 40 to begin with, and we get a few more trades there, but again, the range of the bars, so let's try 45, and there we start to see more trades on the chart. Of course, this does pose a problem, and again, what you want to do is to play around with this and find a strategy that suits yourself. I mean, here you've got an 88-point risk. So how do we actually get around those sort of risks and still keep the percentages down at a low rate? Well, if you right-click on the trade lines and then select risk management, you will find a calculator in here. Automatically appears, and you include the total value of your trading capital. Let's say it's 1,000, for example. You don't want to risk any more than 1%, and the calculator will tell you how much it proposes that you risk per trade. And I'm just going to switch to ETX here for a second. I'm going to right click on here, go to trade, new order, and here you've got the value. On my particular one, it goes down to 10p per point, and then in here you can see if I wanted to do this trade and still keep the risk down at 1%, I have to go down to 10p per point. So I'm still overall not risking anything than I would if I had only got 20 points at a pound or whatever. It doesn't, or 50p, it doesn't matter. This automatically will calculate the percentage risk, and it's the percentage risk of capital is what you should be looking at, not how much you can bet per point. And this will automatically say, well, actually the best for the given risk at the moment and volatility in the market, you want to consider 10p per point. And if I increase this to 20p, we go to 1.76% there, as it's shown in the bottom. So again, you can use this to adjust to the current level of volatility that we have in the market, and you can see there you only need to do the odd trade. You haven't got to trade all of them, but you can see there the volatility picks up, the increased in volatility. The software picks up those winning trades that drove the market, and this one in particular is very interesting because it's not the plunge protection team. I thought it would have been, but it's come to light thanks to Zero Hedge, China's national team, now bailing out US markets. Many people wondered what the trigger for today's massive short squeeze was. We may have found the answer. Right as the market shorted stocks started to soar, someone decided to buy offshore yuan with both hands and feet. Yes, in the middle of the US day session, this held up until the New York close, and now offshore yuan is fading back fast. So did China's national team step in and save the world today? So again, let's just go back to the chart, and as I said, on the overnight now you can see the market moving back to the downside there, finding support at these lows. Now this is very important because we are once again going back to what I spoke about yesterday. Interesting that they came in at the level where we'd already got the market marked up, and where there's going to be a problem in the next few days. If the market goes back down to 15,572, we went through this yesterday convincingly, and then we saw the market being brought back. The 15,254, I have no doubts, is going to be reserved for the plunge protection team, because once this breaks, that really does set a precedent and also shouts to the world that we have a major problem because it's not held. You can see there the decline in this market. But watch the 15,572 if we go down to this level again today. And if it breaks convincingly, we now need to take yesterday's low out as well, because this now has found a support level in the market at 15,447. So again, watch this area. And economic news today. Well, yesterday I sat waiting for the crude oil news to come out, and only to see it disappear in a nanosecond before it was about to be released. I was currently short crude oil, been taking advantage of the decline, and will continue to sell that on a rally down to what everybody believes is the $10 range. But yesterday, sitting there waiting to see if this surplus would come out and send the market lower, and guess what? It disappeared, and they've postponed it until today. So 4 p.m. today we get the crude oil inventories. I thought they'd actually removed it because it was that bad for the oil market, but because of the Martin Luther celebrations on Monday, they put it back a day. So we must keep this one in mind with crude oil inventories. They now decide that Wednesday's no good. If they have a bank holiday, they want to push it back to the Thursday. So let's see what happens at 4 p.m. today. That's half an hour before we go into what is normally the quieter part of the session, but I don't think it's going to be quiet for some time. Also, implied volatility moving higher, 23.62, but not actually climbing sharply higher. This is sort of a slow climb up. Watch the 25% area, because we'll certainly be in around the 100% area for the implied volatility, the potential market bottom. And we're bound to have a breather, and it's possible to have a breather as well before we take out those August lows. Bit of a rally, and then attack it again like the Chinese market did with the 3,000 level last week, and also in August as well. Speaking of which, quick roundup of what's still happening globally. The Baltic Dry Index continues to move lower, down 5, minus 1.38. Again, year-to-date chart, you can see this continuing to move lower. The commodities index also continuing to move lower, but up slightly. Bit of a bounce there if you look at the 1 month chart, just coming off the lows of this week. And the Shanghai down 1.5% on the overnight market as well, 2929. So again, still weakness out in China, which of course is reflected in the Dow overnight markets. Right, that's it for me for today. Hopefully giving you a few suggestions there that by keeping the risk low on your trading account, you can still trade. And again, it will you might have to go down to 10p per point in order to keep that risk low if you have a smaller account. It is possible to do, but be warned, the volatility like yesterday where that market turned around and came back can be quite fierce, and it's just a product of what they're doing at the moment, trying to hold these markets up before they eventually all collapse. Right, that's it. I will see you in tomorrow's edition. As ever, thanks for watching, also for your support. And let's see what happens today with the crude oil report at 4 p.m. And as ever, thanks for watching. See you in the next one.